Hey everyone, welcome back to Corporate Decoder. Today, Grandeur Peak Global Trust just filed their N-CSR form, and I am seeing a mixed bag of performance across their funds. Quick note, this is not financial advice, just my take on public filings for educational purposes. The funds are showing some impressive gains on paper. But the story gets complicated when you look at their performance versus their benchmarks. Let's break down a few of these funds. We are looking at their annual shareholder reports for the period ending the 30th of April 2026. First up, the Grandeur Peak Emerging Markets Opportunities Fund. The institutional class ended the year with a plus 32.75% return. That sounds pretty good, right? But get this, their benchmark, the MSI Emerging Markets Mid Cap Index, actually posted a whopping plus 40.65% return. So yeah, they underperformed. The report says their strong performance was thanks to tech, especially those semiconductor stocks in Taiwan and South Korea, and also the industrial sector. But the reason they lagged behind was that they were underweight in the materials sector and had some underperforming plays in consumer discretionary companies. Looking at the numbers for this fund, net assets were around $35 million with 61 portfolio holdings. Their advisory fee, even after considering waivers, was close to $1 million. Portfolio turnover was at 30%. Now, let's zoom out and see how this fund has done over the last decade. If you had invested $10,000 in April 2016, by April 2026 your investment would be worth around $19,057. Compare that to the MSI Emerging Markets IMI Index, which would have grown that same $10,000 to over $24,000. And the MSI Emerging Markets Mid Cap Index would have turned that 10 grand into nearly $24,000. So over the long haul, this fund has really struggled to keep up with its benchmarks. The average annual returns paint a similar picture, 32.75% for the fund in the last year, but only 0.58% over 5 years, and 6.6% over 10 years. Meanwhile, the benchmarks are consistently higher. Let's switch gears to the Grandeur Peak Global Contrarian Fund. Their institutional class saw a 23.98% return, but again, they underperformed the MSCI ACWI Small Cap Index, which did 36.85%. The report blames this underperformance on a lack of exposure to those energy materials and industrials companies that really benefited from the AI and data center boom. It's the same story we see often chasing growth in tech helped, but not having enough exposure to the big market movers hurt. This fund is a bit larger with net assets around $144 million and 91 holdings. The advisory fee was about $1.45 million and the portfolio turnover was quite high at 67%. This means they were buying and selling a lot, which can rack up costs. Moving on to the Grandeur Peak Global Explorer Fund, the institutional class had a 25.66% return. Again, they trailed the MSCI ACWI Small Cap Index, which was up 36.85%. The reasons cited are similar strong in tech, particularly semiconductors and hardware, but a lack of exposure to those energy materials and industrials players that benefited from AI investments. They also faced a headwind where companies with low returns on capital outperformed those with high returns on capital. This is a smaller fund with net assets of about $15 million and 43 holdings. The advisory fee was surprisingly low at just over $21,000, but the portfolio turnover was very high at 153%. That's a lot of trading. Now, the Grandeur Peak Global Microcap Fund. This one looks pretty rough. The institutional class only managed a 7.70% return, while the MSCI World Microcap Index soared by 37.97%. Ouch. The report points to an overweight and underperformance in software, and it services a lack of exposure in biotech. And again, that missing out on the AI-related energy, materials, and industrials plays. It seems like a common theme across these funds. They are struggling to keep pace with the broader market. This fund has net assets of about $45 million and a whopping 101 holdings, which might explain some of the difficulty in tracking benchmarks. The advisory fee was around $693,000 and portfolio turnover was 51%. Let's look at the Grandeur Peak Global Opportunities Fund. The institutional class returned 20.04%, again underperforming the MSCI ACWI Small Cap Index at 36.85%. The reasons are echoing the others, strong in tech and industrials, but hindered by software, healthcare, and that big AI catalyst that they missed out on in energy. Materials and industrials. This is one of their larger funds with net assets of about $348 million and 95 holdings. Their advisory fee was quite substantial at nearly $4.8 million and portfolio turnover at 60%. Then trees the Grandeur Peak Global Reach Fund. The institutional class returned 17.10%, significantly underperforming the MSCI ACWI Small Cap Index's 36.85%. Their reasons are a familiar refrain, positive in tech and industrials, but dragged down by financial stock picking and missing out on the AI boom in energy, materials, and industrials. This fund has around $83 million in net assets with a very high 198 holdings. The advisory fee came in at over $915,000 and portfolio turnover was 65%. The Grandeur Peak Global Stalwarts Fund institutional class returned 21.95%, but still lagged the MSCI ACWI Mid-Cap Index at 27%. The culprits here are insurance and banks, plus again not being in on that AI-related energy, materials and industrials trade. This is another large fund with over $1.3 billion in net assets and 77 holdings. The advisory fee is substantial at over $10 million, and portfolio turnover is high at 71%. Finally, the Grandeur Peak International Opportunities Fund. Institutional class returned 16.90%, trounced by the MSCI ACWI X USA Small Cap Index at 34.14%. Similar story, tech and industrials were good, but healthcare and missing the AI plays hurt them. This fund has net assets of about $191 million with 88 holdings. Their advisory fee was around $2.9 million, and the portfolio turnover was 41%. Across these funds, the costs for a hypothetical $10,000 investment show a range. For the Grandeur Peak Emerging Markets Opportunities Fund institutional class, it was $189 or 1.62%. For the Grandeur Peak Global Stalwarts Fund institutional class, it was $118 or 1.06%. Even for the Global Microcap Fund institutional class, it was $208 or 2%. These fees, especially when a fund is underperforming its benchmark, start to look pretty steep. It is like paying top dollar for a coach who keeps losing games. P item 2, Code of Ethics. FIP. Now, a quick look at their internal code of ethics. The filing states they have these standards in place, covering honest conduct, clear disclosures, and compliance with laws. They also mention no amendments or waivers were granted during this reporting period. However, the code of ethics is not posted on the registrant's website, which is a bit of a miss for transparency. When it comes to financial oversight, Mark H. Taylor is identified as an audit committee financial expert. This is important for ensuring that financial reporting is accurate. However, the filing also states that no member of the audit committee as a whole has all the technical attributes required to be an expert, but they believe the collective experience offers adequate oversight. This is a bit of a cop-out, suggesting they might be cutting corners on financial expertise. Let's talk about the auditors for the year ending the 30th of April 2026. Audit fees were $228,980 and tax fees were $54,040. In the prior year, audit fees were $200,800 and tax fees were $47,400. These numbers seem reasonable for the size of the funds, but the fact that the audit committee needs to pre-approve all services, even to the advisor, suggests some level of oversight. Looking at the investment details for the Grandeur Peak Emerging Markets Opportunities Fund. Technology hardware made up 19.3% of net assets, followed by semiconductors at 9.2%. They were heavily invested in Taiwan and South Korea, with Taiwan alone accounting for 22.6%. The top holdings were Silogy Corp at 5.6% and AirTac International Group at 3.9%. For the Grandeur Peak Global Contrarian Fund, their industry weighting shows a healthy dose in healthcare at 23.8% and industrials at 17.2%. Top countries were the United States at 16.9% and the United Kingdom at 13.8%. The largest holdings were Recordati Industria Chimica e Pharmaceutica SPA at 4% and Interpump Group SPA at 3.5%. The Grandeur Peak Global Explorer Fund had a significant chunk in technology at 30.2% and industrials at 25.9%. Their country breakdown shows the United States at 29% and the United Kingdom at 14.7%. Top holdings included Silogy Corp at 4.5% and Asia Vital Components Co. Ltd at 3.6%. The Grandeur Peak Global Microcap Fund, as the name suggests, is all about smaller companies. Technology was 21.7% and healthcare was 20.5%. Japan made up a large portion of their country allocation at 19.9%, followed by the US at 15.2%. Their top holding, Pennant Group Inc., accounted for 3.5%. For the Grandeur Peak Global Opportunities Fund, industrials were the largest sector at 35.4%, followed by healthcare at 22.5%. The US held the top spot for country allocation at 20.1%, with the UK at 17.2%. Silogy Corp was their top holding at 4.4%. The Grandeur Peak Global Reach Fund had a similar sector breakdown, with industrials leading at 28.5%, then technology at 19.6%, and healthcare at 16.6%. The US was their top country at 25%, followed by the UK at 11%. Top holdings here were Silogy Corp at 1.4% and Verbac at 1.3%. The Grandeur Peak Global Stalwarts Fund, on the other hand, had a massive 47.5% allocation to industrials, followed by technology at 19.5%. The United States dominated their country allocation with 31%. Their top holdings were Primaris Services Corporation at 4% and Rosebank Industries plc at 3.4%. The Grandeur Peak International Opportunities Fund had a significant allocation to industrials at 34.5%, technology at 20.8%, and healthcare at 13.6%. The top countries were the United Kingdom at 19.3% and the United States at 14.0%. Their top holding was Volution Group plc at 3.7%. Finally, the Grandeur Peak International Stalwarts Fund. Industrials also led here at 43.3%, followed by technology at 23.8%. The US was their largest country, holding at 13.6%, closely followed by the United Kingdom at 13.6%. Their top holding was Rosebank Industries plc at 3.8%. It is interesting that the investor class and institutional class of this fund have identical performance and holdings. One thing to note across several of these funds is a change in advisory fees. Effective the 31st of December 2025, the advisor ended its voluntary waiver of a portion of its management fee. This means costs for investors will slightly increase. For example, the Grandeur Peak Global Opportunities Fund and Grandeur Peak International Opportunities Fund saw their advisory fee waiver for assets over $500 million end. And the Grandeur Peak Emerging Markets Opportunities Fund had a similar waiver end for assets over $400 million. This trend of fee waivers ending generally means higher costs for the shareholders. When we look at the investment details, the consistent theme is a strong focus on technology, particularly semiconductors and then industrials and healthcare. However, the failure to capture the upside from AI-related energy, materials and industrials companies seems to be a recurring drag on performance across many of these funds when compared to their benchmarks. It suggests a potential lack of agility or a bias in their investment strategy that prevents them from fully capitalizing on market trends. Looking at the tax components, some funds have significant undistributed long-term capital gains, like the Grandeur Peak Emerging Markets Opportunities Fund with over $6.9 million. This means that any future distributions from these gains could be taxed. The Grandeur Peak International Stalwarts Fund has a massive $382 million in undistributed long-term capital gains. Overall analysis, so what is the big picture here? For the most part, these Grandeur Peak funds are showing solid performance in absolute terms. But the recurring theme of underperforming their benchmarks is a major red flag for investors. It suggests that while they are picking decent companies, they are missing out on the broader market moves, especially the AI-driven rally in certain sectors. This underperformance, coupled with the end of some fee waivers, means investors might be paying more for less relative return. The story for these funds seems to be a constant struggle to keep up with the market, which is a tough pill to swallow given the fees they are charging. The big risk I am watching is whether they can adapt their strategies to capture these broad market trends, or if they will continue to trail behind, leaving investors frustrated. The question investors need to ask is whether the management fees are justified when the funds consistently underperform benchmarks. What I am actually looking for is a clearer strategy shift or a more compelling reason to believe they can outperform in the future. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, and subscribe. Join the Discord in the description.